Citigroup just made a bold call, raising Alphabet Inc.'s target price from 280 to 343 hours. That's nearly a 22% upside from recent trading levels. But why now? And what does it signal about Alphabet's future, AI monetization, and the tech market's next phase? Let's break it down, because this upgrade isn't just about one stock. It's about how Wall Street is repricing the future of AI. Setting the scene, Citigroup's new price target for Alphabet, ticker symbol Google, implies a market cap approaching $4.3 trillion. To put that in perspective, that's nearly the combined GDP of Germany and France. The upgrade came after Citi analysts published a detailed note highlighting three key catalysts driving their bullish stance. 1. Accelerating AI integration across Google's ecosystem. 2. YouTube's transformation into an AI-driven ad powerhouse. 3. And early signs that Google Cloud is turning into a margin expansion engine. The core thesis. Let's unpack that. First, AI integration. Google's been late to show AI, but not to build it. From the Gemini model to search generative experience, Citi believes Alphabet's AI rollout is finally translating into measurable revenue potential. They estimate that by 2026, AI-assisted search ads could add $15 to $25 billion in incremental annual revenue. That's not futuristic. That's imminent. Second, YouTube. Citi analysts called YouTube Alphabet's underappreciated growth engine. Why? Because YouTube Shorts and generative AI tools are driving engagement while improving ad yield. In Q3, YouTube ad revenue grew by over 20% year-over-year, beating estimates and signaling that advertisers are shifting spend back to Google's ecosystem as tracking restrictions bite Meta and TikTok. And third, cloud. After years of heavy investment, Google Cloud is now profitable, posting operating income above $1 billion last quarter. Citi believes AI workloads will significantly boost margins here, turning cloud into a long-term driver rather than a drag. The numbers behind the upgrade. So, what does $343 actually reflect? Citi is pricing Alphabet at roughly 25x 2026 earnings, assuming EPS growth of around 13 to 15% annually. They're projecting Alphabet to generate over $110 billion in free cash flow by 2026, which would justify a premium multiple, given the company's massive moat in search, video, and cloud. Compare that to Microsoft, which trades around 30x forward earnings, and suddenly Alphabet looks, in Citi's words, a high-quality growth stock still priced like a value play. The market context. Now, the timing of this upgrade matters. Alphabet's stock recently lagged peers like Microsoft and Nvidia, mainly due to fears that AI search would cannibalize ad revenue. But Citigroup is calling that fear overblown. Their research shows that user engagement remains strong, and AI integration could actually increase ad relevance, not reduce it. This view contrasts with some other firms. For example, Barclays recently maintained a neutral stance, citing uncertainty around monetization timing. Meanwhile, Morgan Stanley kept its overweight rating but with a more conservative target near 310. So Citi's $343 call stands out. It's among the highest targets on Wall Street. What's changing inside Alphabet? Under CEO Sundar Pichai, Alphabet's message has shifted. It's no longer search first. It's now AI first. From Bard's evolution into Gemini to AI-powered tools in Workspace and YouTube, Alphabet is rebuilding its core products around generative intelligence. Citigroup analysts noted, Alphabet's unique data assets across search, maps, video, and enterprise position it to monetize AI faster and more efficiently than any other platform. They also highlighted internal cost discipline, the quiet layoffs and reorganization efforts that could lift operating margins by 150 to 200 basis points in 2025. This combination of AI-driven growth plus expense control is what's giving Citi confidence in that 343 target. The risks, but no forecast is risk-free. Citigroup acknowledged three main headwinds. 1. Regulatory pressure, especially from the U.S. antitrust trial, which could reshape Google's search dominance. 2. AI competition, as OpenAI, Anthropic, and Meta race to capture user mindshare. 3. Ad cycle sensitivity. If global growth slows, digital ad budgets could tighten again. Still, Citi argues these risks are manageable given Alphabet's cash position, over $110 billion on hand, and diversified revenue base. What this means for investors. So, what does all this mean for investors? It's a signal that Wall Street is rotating back into mega-cap tech as the AI narrative matures. Alphabet isn't a speculative AI bet. It's an established profit machine getting an AI upgrade. Citi's target suggests that even after a massive rally in big tech, there's still meaningful upside if Alphabet delivers on execution. Long-term investors might see this as a re-entry opportunity, especially as valuation gaps narrow between Alphabet, Microsoft, and Amazon. Citigroup's call isn't just optimism, it's a statement about where tech is heading. AI isn't just transforming industries, it's redefining how analysts value them. So whether Alphabet hits $343 or not, one thing is clear. The battle for AI monetization is far from over, and Alphabet just reminded Wall Street that it's still one of the most powerful players in the game. If you found this breakdown insightful, hit that like button, share it with a fellow investor, and subscribe for more deep dives into the financial forces shaping our world.